Okay. Hey, Jonah. Hey, James. How are you doing?
Doing great,
Yeah.
Abby. How are you?
I am good as well. I'm good as well. Thank you for joining. And it's been like now 4 or 5 years since we
That's right.
started when we met. Yeah,
The
time
adventure.
flies. That's crazy. So yeah, so please quickly introduce yourselves and then we can get going.
Yeah,
Like,
my name is Jonah Chininga, co-founder and CEO at Wovio. Really focusing on the financial inclusion space, just based on our own experiences as immigrants to Canada. So yeah, that's a bit about me,
I
James.
mean,
Great.
James Mohato, hi everyone. One of the co-founders at Wovio and community success lead, really focusing, yeah, as Jonah mentioned, on that community angle of how do you transform community access to capital and access to credit needs into a modern solution for like the 2024 and beyond.
Okay, great, great. Thanks, James. So yes, so both of you are very focused on financial inclusion, community development. So tell me very quickly, how does Vovio do that?
Mhm. Yeah, so for Wovio, for us, our solution is just leveraging technology for a system that has existed for centuries, which is a system of cooperative savings and credit, right? Some people know them as rotating savings groups. And these are systems whereby communities utilize their own group savings as line of credit to empower their members. And the main benefits with that system is one, it's very accessible because all you need is a community of people, so they're not traditional barriers. And secondly, for these individuals who are typically underserved by the traditional system, it's the cheapest and most affordable form of credit that they can have, right? If you're comparing
Hmm.
what their credit risk is and then how much interest fees that they have to pay, they're paying over 25% in interest fees, but then this system to them, it's interest free. So that's how they're able to utilize this to be able to build capacity and wealth within their communities.
Mhm.
Okay, great. Yeah, so that sounds very interesting. So you taken a model which was in the eastern geographies to the Canadian marketplace or to North
Mhm.
America. But tell
Mhm.
me, like, what is financial inclusion for you and why is it important?
Mm. Actually, can I jump in there, Jonah?
Yeah, please.
I think more so just I think to give context, but also to frame it. When it says a system that we took from the East or from other parts of the world, this is really a global system in the sense that it's practiced by almost every community across all cultures and across all age demographics.
Hmm.
So we were thinking about it not from the sense of something new and almost like revolutionary, almost taking something that is tried, proven, has worked among societies, but almost translating it into what a modern solution could look like. And I think some of the reasons why it really has worked is because these systems really rely on social proof, but also that social collateral of good behavior being tracked and being now digitized into almost a numeric quantifiable solution, which is where that inclusive data, alternative data really comes into play and is really powerful.
Got it.
Yeah.
Got it.
And I can also add to what James mentioned, that in terms of financial inclusion, one of the biggest pieces, there's a core focus on access to credit, but then something that is not spoken a lot about, which actually leads to more wealth inequality, is the cost of credit, right? So to put an example to that, in Canada, there are 9 million people with credit scores under 700, so they're non-prime consumers. And then these individuals just in 2023 alone paid around $62 billion in interest fees.
Wow. That's crazy.
So exactly. So when you look at it from like that's money that's coming from these low income credit underserved communities and going into the mainstream ecosystem. And the harsh reality that those with less have to pay more is kind of like why we do the work that we do. And it's something that resonates with most of the communities that we work with is why save with a bank that you can't borrow from. So that's why they end up relying and utilizing these community development pools, which can be a game changer in terms of economic access.
So that's a very important point you just mentioned. The big thing that I've realized as part of this initiative that I'm running called Data for Inclusion is that there are long-standing assumptions that people have. And these
Mm.
assumptions are that this is the way it's supposed to work. Otherwise, it's not profitable. It cannot be done. It's too risky. So how do you challenge those assumptions? And what you just talked about is a clear example of yes, those assumptions can be challenged.
Mhm.
And without challenging those assumptions, you really cannot break down the barrier. So you're trying to break down this big barrier
Mm.
around an entrenched system, but
Mhm.
how do you really scale it? Because think about that, yes, you and as an entity is trying to create these community pools. But then on the other hand, you're talking about incumbents or established institutions, financial institutions like banks, who
Mhm.
have access to a lot of these resources. So are
Mhm.
you saying, how do you really scale up? Do you work with them? How are you envisioning this?
Mhm.
Yeah, no, a big piece is our partnership, because we can never do this alone. And then for us, we see a very strong partnership angle in Canada, specifically speaking about Canada from a credit union perspective,
Mhm.
right? There are thousands of credit unions in Canada. They have over $300 billion in assets under management. But then for some of them, they don't have penetration into these new communities. So that's how we can be able to partner with this existing ecosystem to be able to support our mandate and mission. And then the second piece from an customer acquisition piece, I think one thing that we've seen working really well, it's case studies and sharing the success stories,
Mhm.
right? So like challenging the data whereby like, oh, hey, these customers have high credit risk. But then for us, what we're seeing is within these communities, the repayment rate is 99%, which
Wow,
is
that's
unheard
great.
of. Yeah,
Yeah.
exactly. So what are some of the data points? What
Mhm.
are some of the financial behaviors and the incentives that you're looking into this that we can be able to utilize to extend credit to these individuals, to partner with banks, credit unions, and the government to be able to extend that impact into them? I think that's something that's a very interesting insight in terms of like the traditional assumptions and then the actual insights on the ground.
Absolutely.
Yeah, that's great. James, do you want to add something?
Yeah, I did really. I think it's very. I think it touches on your with the question and how you mentioned it is that okay. So there's these models. These are models at the end of the day. So what we feed into them is really what we're having that discussion upon.
Right.
So as from an incumbent, I think there are things we can actually. Yeah, there are things we can have in our wish list. But from the other side of the partnership, it's I think that willingness of adjustability or how do we improve or enhance these models that have been established by the banks, by the governments, by the industry associations, almost to enhance and build them. Because if the money has been invested into building it, how about making it more robust in terms of how do you want to invest your dollars? Is it on utilizing your current model or expanding it to really open up the access to the market, which in turn will hopefully increase profitability across the board for everyone, because that in turn will hopefully also drive better financial habits and better financial outcomes for everyone.
Yeah, and that's a really good point because ultimately, data or the technology are a means to an end, right? If you look
Mhm.
at an individual that you're serving,
Mhm.
what are they trying to achieve? Just
Yes.
like all of us, they have the same dreams. They want to be well established. They want to
Mhm.
have money saved for buying a house or buying a
Mhm.
car or saving money for kids' education. So ultimately,
Mhm.
everyone kind of have that bucket of
The
life goals
outcomes.
or dreams.
Mhm.
How
Mhm.
do you really help them achieve that
Mhm.
is the key. So
Mhm.
it seems like you're getting there. Like, are you excited about that?
Yeah, no, that's something that for us is very exciting, because the problem that we're solving for us, it was a lived experience.
Mhm.
So you can actually see it from one having experienced the problem and then the impact of the solution from a personal experience. It's just a matter of how can you be able to scale this to other people, because our vision as a company is how do we transform community banking into community wallets, whereby it's accessible to any community, right? If you look at banking at its core, it's just communities' capital put together and
Correct.
then distributed with different underwriting models. There's
Mhm.
another model that can change that. And then being able to pioneer something that is used by over 1 billion people globally and try to be able to make it more accessible and connect it as an on-ramp into the mainstream ecosystem, I think that can actually have an impact that can change people's lives.
I think that's really well said. How technology and data can be used to solve this massive, very long-standing problem,
Mhm.
keeping in mind that everybody benefits, especially the end consumer. But
Mhm.
do
Yeah.
you see there are two main parts now? One often thing that is talked about in the banking space is risk. So you have
Mm,
proven that yes, the risk or there was a perception, but truly
Mhm.
the risk is not there, uh,
Mhm.
mhm,
and there are controls to mitigate that risk. The other
yeah.
Yes.
piece is because 99% payback is phenomenal, right? I mean, it's and depending on the product, you can further improve it. The other
Mhm.
part is, are you leveraging AI? There is a lot of talk around AI, and do you see that being, helping in this journey, or do you see that as an impediment?
Mhm. Yeah, no, we see that as one of the technologies that we can utilize to actually enhance the work that we're doing, especially from a credit risk perspective. So taking the data and the information that we're getting into having an alternative credit scoring system, for example, and then also having the ability to be able to make predictions based on the historical data within these communities. Because for us, it's always how do we transform these insights into impact? And I think that's where like we can be able to use that information as a way, one, we see it in terms of partnerships, whereby like people are utilizing this, and then from a traditional banking credit scoring system, how do we create that on-ramp in between to be able to help people get access to credit and then get access to participate more within the economy. So we see a strong push for that to be able to enable us to be able to expand the work that we're doing.
Great, great. Thank you, Jonah. Any comments from you? Any parting comments from you, James?
Actually, I wanted to double down on what Jonah mentioned, unfortunately. Because I think data has the wonderful potential to show us some really good insights into the customer and the consumer experience and what they're really demanding. And when you enhance that now with the financial component of helping people achieve their financial dreams, it allows us to not only create a really unique customer or individual experience at the consumer level, but when we're working with communities, especially in directing their own finances towards the mission and the vision of the things that are most important to them, you can really come about with almost a world where solutions are customized for not only individuals, but also communities, really enhancing that access to credit at a very broad level, but really empowering the end user at the end of the day, because AI does allow us to have those almost customized risk levels or risk barriers that can exist for people, but really at the same time can be applied more broadly to larger populations. And it becomes very exciting when you think of it that way.
Yeah, I think that's really well put, because now with artificial intelligence, you can actually segment the population. You can go very granular, customize to that segment based on what their behavior is, what their needs are, or what their lived history is.
Exactly. Yeah.
Because everybody has a different experience.
Yes. Yeah. So that's the excitement. Yeah, I think that keeps us going.
That's amazing. So yeah, best of luck to both of you. Thank you again, and I wish you all the best for the future. Thank you again for joining.
Thanks, Abhi.
Our pleasure.
Okay,
Thank you.
take care. Thanks.
All right.
Bye now.